Welcome to my daily review. You're looking at a daily chart of the Nasdaq, and you can see that it was down on Monday. It was up on Monday, 28 points, and gave back 25 points today. So that is a definition of going sideways here for the last three sessions. And the volume did pick up today, on the downside, but Monday was an abbreviated session. But anyway, it's just going sideways, and after this big run, it's healthy for this thing to pull back a little bit. I pointed out the trend line here that it was bumping up against it recently. So for it to pull back a little bit, it's in that channel, and so a pullback into the channel is healthy. And it's in a power trend, just allowing the moving averages to catch up. So this is good, healthy action in my humble opinion. And so the Nasdaq's doing just fine. The IWM, that one suffered a little, the Russell 2000, that one suffered a little greater damage today, but still closed above its 10 EMA. You can see this. Remember also, the Russell 2000 has about 17% of those small financial institutions as its component. So the IWM sold off a little more than the rest of the market today. What was working for the Nasdaq was Meta, because it has its let me get this out of here. It had the Twitter killer Threads. I don't know if I really have no opinion on Meta platforms or its Threads or Reels or whatever it is to compete with its what is competition. But just looking at the stock, it gapped up on earnings, formed a little consolidation period. Now it's just been running hard. Pull back to the 21 one time. I mean, that was like your opportunity to get it after it broke out of the base, and now it's just surfing its 10 EMA, the green line here. And there's nothing to do with this stock. You just hold it. I mean, there's a lot of stocks, and that's one of the hardest things to do in the market, is just hold on to your stocks. NVIDIA is another one. This one had a 3 weeks tight pattern. Last time it had a 3 weeks tight, the buy point was 390, and it ramped to 440, nice $50 gain. And now it's formed another 3 weeks tight pattern with I got about a 425 there. So the folks at MC Stock Charts are definitely on this one for sure. Tesla is another one. These are the ones that drive the market. It was up $18 on Monday, 18 and change, and today it ramped another 1%. So the stock is racing hard. It's closer to 300 than my SMCI. And I wanted to point out SMCI because it's seeing a lot of early buying every session in the morning. I got to get this out of the way so you can see when the market opens here, it's ramping higher and then selling off. It ramps in the morning, the first 15, 20, 30 minutes. There you see again, this is a nice ramp. And then on Monday, the abbreviated session gapped higher and then sold off. This morning, it was up like, I don't know, 13, 14 bucks. It still finished up, nearly $6. But you can see these ramps in the morning. Somebody's buying this stock in the morning, selling it off, rinse and repeat. That's fine. I tend to look, more like at the daily and the weekly charts. I mean, this thing ran from 93 to 270, what, a 6 week period or something. So people ask me, what's wrong with this stock? Well, absolutely nothing's wrong with this stock. It was at 93 here on April 25th, ramped to 270 on June 9th. So what is that, 6 weeks? And it's up. Now it's at 255, so there's nothing wrong with it. Okay, give back a little bit. Had this nice downtrend line here that it broke above. I would consider that right there a buy right here. And if you didn't catch that one, I'd say that 250, right with this this high as of this day, add-on buy point. Anyway, this one just looks good. You can see the big accumulation here, the volume. And the big ramp higher, and now it's just kind of going sideways. I'd call that a high tight flag, although it's not that tight. Could be tighter, but it is flagging for sure. And looks completely healthy to me. Anyway, I want to take a look at some of the home builder stocks. This is Nail. This is the exchange traded fund home builder, and it just pulled back, until it's 10 today. And some of the stocks in there, I'm expecting rotation as the calendar changes, that we have a new quarter. And I don't know where the rotation is going to or coming from, but it could be from the home builders and semiconductors, because there's a lot of gains to be had here, a lot of profits to take and rotate into another sector. And this is DR Horton, had a nice run, just pulled back to the 10 today, completely healthy, doing nothing wrong. But there are some profits in this group to take, and this is a Pulte. Once again, had this big run. Now it just goes sideways. Still, right at its 10 EMA. Any stock, above its 10 EMA is, just fine. So I like these to have a little bit of profit taking, rotate out of them. It keeps the market healthy to rotate, around to different groups. Meritage is another one. Just pulled back to its 10 today, closed just slightly below it. But, there's a lot of profits to be had in these stocks. Also, the semiconductor stocks, Advanced Micro Devices, AMD was upgraded this morning, and thought it was going to move higher, and it went up to like 117 and change, and then pulled back and closed below 114. That's a closing range of 3%. So that's like an inverted hammer candle, which we don't like to see there, but it's still above its moving averages. And AMD looks fine. MRVL, another one that's on our ready list or watch list. You can see this one's flagging after a big move. I like it here about 60, and it pulled back today 2.5%. And again, closing range 2%. So that's a nice inverted hammer candle. But, just real light volume here. It's real sleepy sessions this holiday, 4th of July holiday. On semiconductor, ON. This one pulled back pretty heavily today, 4%, and but it's still above its 10, nearly 1% above its 10 EMA. So that looks healthy as well. And there are profits to be had in these stocks. This is AEHR. This is a wild bucking bronco, very difficult to hold, but you can see here it was down 11% today, but still in a buy range there at 39. This thing's wild. But you could see on the weekly, it's got this consolidation pattern. It ran right from its lows to 200, right up, to new highs. And now it's just kind of trending sideways for the last 4 or 5 weeks and allowing the moving averages to catch up. So on the weekly, it looks pretty good. On the daily, it's just a wild, bucking bronco stock. Very difficult for me, to hold. Okay, where might the profits be going? Well, for sure, they're going into the airline stocks and then the cruise lines. I'm just going to focus on the airlines. This is the exchange traded fund Jets, and this one has got a nice cup with handle pattern. It's moving out of its base, so that looks good. Delta Airlines, one of the leaders in this group, 31 billion market cap, and you got to look at the weeklies. It's got this big, cup with handle, and then now it's just ramping higher the last, 6, 7, 8 weeks. Very strong stock. We have a couple on our ready list or watch list this week. One of them is United, which is up, the first couple of sessions and starting to pull away from this base here. And the other one was ALK, Alaska, which has, similar patterns. Similar to Jets and similar to United. Got the cup with handle, and now it's just pushing away from its base. So the train is leaving the station, or the jet is taking off from the runway. Anyway, I got a couple more I want to show you. I guess I could show you ELF. Once again, doing nothing wrong. It's very close to its 52-week high, 1.2% off its 52-week high. And you can see it has not formed a base since last summer. It just stair steps higher and higher, taking market share, sales and earnings growth, and accelerating. And as I mentioned earlier, sometimes the toughest thing to do is just sit on your stocks and allow them to grow. And with Elf Beauty, that's kind of what you have to do here. It's not doing anything wrong. Celsius is another one that I wanted to show because it's really tight here. It's forming a 3 weeks tight pattern. If it continues, let me zoom in on this chart here, because it had a It finished 2 weeks ago at 150 and a dime. Last week it closed at 149.19. And this week it's at what is it? Come on, Marty, what's it close? Don't be a dummy. 147. So it just has to close, 148 or so. It'll be a 3 weeks tight pattern, which is no guarantee, there's no panacea for success, but it is showing that investors are willing to pay this and they're not selling it because it's too high at $150. So that looks good to me, and just allowing the moving averages to catch up. It's had a nice move here from 84 to 147, and so a little sideways action is always healthy, especially on the the lighter volume here. You can see that volume drying up on Celsius in the last few sessions. It's been really sleepy on the market this week. Another one I wanted to show you, a software name is MNDY. I believe it's on our ready list and watch list. And on the daily, it looks, this cup-shaped pattern, nice consolidation in the pullback. It's below the 21, granted, which I don't really like, but you can see on the weekly here how quickly it ramped all this volume here on the right side of its base, and that's kind of like AEHR, went up so fast that it needs to give it some time for the moving averages to catch up, and so it's traded sideways or a little bit down in lighter volume the last 5 or 6 weeks, but to me it still looks pretty good. Any other ones that you want to show, Marty? How about Palo Alto Networks? So it had that long consolidation period, and then it has bounced out of that base, and to me that's in the profit taking zone. It's above the 10. I mean, it's doing nothing wrong. Once again, this is one that you just hold. I mean, I wouldn't buy it here. I wouldn't sell it either. I mean, it's just something that, if you're in, great. It's a leader of the cybersecurity space. And if you're not, it's pretty tough to buy it up here, because when it, just has a little pullback, you get shaken out. At least I do. This is Fortinet. Once again, you can see the consolidation, long, 18 months consolidation in Fortinet. And to me, that's the buy point. That not this one here in 69. That's a short little consolidation, but this one here, the high from 18 months ago, which was 74 something. Yeah, 74.35. So yeah, it's right there. I mean, so but this is a slower moving stock. They had a big 5-for-1 split not too long ago, and it just kind of idly goes higher. You can see here it's sold off below its 50, ramp back through, and it's just kind of grinding higher. Anyway, I'm going to stop there. Just thanks for watching. Hopefully the market here picks up a little acceleration into the close of this week, and we never give up.